First company which we'll discuss is PVR INOX. If we talk about company's recent quarterly results, we could see that there has been an increase in sales. Sales was increased by 10%, and net profit it is shown is increased by 61%, but in actual it is not an increase but reduction in total losses. In the same quarter last year, losses of the company was around 334 crores, which came down to around 130 crores. That is why we are seeing 60% jump, but it is actually a reduction of loss. Company's current market cap is around 13,000 crores and current stock price is around 1326. Since company is loss making, we are not able to see its PE ratio. Talking about overall business of the company, we see that PVR Limited is India's largest and most premium film exhibition company. If we talk about its revenue breakup, then company earns about 52% of its revenue from the sale of movie ticket. It also earns revenue from other activities like sale of food and beverages, which contributes around 30% of revenue, followed by advertisement. If we look at company's growth, then we could see that 2021 was COVID affected year, and that is why the sales was low. But even after that, company showed a good sales growth. From 280 crores in March 2021, it came up to 6,000 crores, and it is net profitable when we come to operating profit. But if we compare net profit, then company is loss making consistently from last 4 years. If we talk about company's technicals, company's current trading price of around 1300 is also its support. Company has a resistance of around 2200. However, as we are aware that stock price are reflective of company's performance as a business, and we have seen that there has not been a good increase in net profits. In fact, the company is loss making, and that is why we can see that the current stock price on which company is trading is same as that of 2017. So in year 2017 also, company was trading at around same stock price, which gives us a good lesson that stock price are reflective of their profit earnings. The stock price are increasing in long run. It means that in most cases profit are also increasing. The reason why there are multiple years in which there was not an increase in stock price when it comes to loss making PSUs or any other company for that matter is the same, that their profit have not gone up. Looking at this company, so if let's say company goes to its all-time high of around 2200, then there is a potential of getting a stock price return of around 66%. However, stock price is unlikely to go up as long as company is loss making. If it turns up and becomes profitable, then of course we can see the stock reaching to its all-time high. Second company from the same sector which we check out is SaReGaMa India. Talking about the company, so SaReGaMa is the oldest music label company from India. The company is aiming to be pure play content company supported by the global consumption boom. Since 2017, SaReGaMa has been making headlines, again owing to the launch of two unique initiatives, SaReGaMa Carva and Yoodle Films. So we see that company has been launching different music albums, and because of increase in consumption of social media, we have seen that there has been a good demand for the content, and SaReGaMa would definitely be a beneficiary of this trend. So company has a current market cap of around 8,300 crores. It has a decent ROE, ROC of 17.6 and 12.8%. It has a PE of around 44.5. So company is profit making. If we compare current PE with historical PEs, we can see that the current PE is above its long-term average. But the good thing about the company is that its EPS is growing. If we look at its sales and net profit, so we can see that there has been a constant increase in its sales as well as in profits. If we look at its compounded sales growth, so for the last 5 years it was 16%, and for last 3 years it was 12%. Compound profit growth was higher, so for last 5 years it was 44%, and for last 3 years it is 59%, and same is getting reflected in its stock price. Last 5 years stock price CAGR of 53%. So compared to other companies like PVR or Z, which are loss making, this company is looking decent. So if at all we are looking to invest something in media space, so such profit making companies look promising, and hence these companies should definitely be in our radar. If we look at company's technicals, company is currently trading at a stock price of around 431. Company has a resistance in the range of its current stock price and 460. We could see that company has shown a correction in terms of its stock price whenever it reached to that band. It also has an increasing support, increasing trend line support. So if company stock price come down to around levels of 370 and 380, that can be a decent range to accumulate this stock, since both profit and sales are growing, and company is though trading at a P of more than its long-term average, but still looks reasonable. Next company which we'll talk about is Tips Industries. If we look at its quarterly performance, so there has been an increase in 22% when it comes to its sales, and profit is increased by 41%. So again we see that company is profitable, which is a good sign. Its market cap is around 5,600 and PE ratio is of 44.6. If we compare its PE with its historical average, then the current PE is higher compared to its average. But the good thing about the company is that it has a good ROE and ROC numbers. We see that ROC of around 107 and ROE of 80, which is a good number. Also company has a good dividend yield of 1.36%. If we check out company's growth, then last 5 years CAGR in terms of sales is 4%, but last 3 years were good. It showed growth of around 39%. When it comes to profit, last 5 years profit growth is around 132%, and for 3 years is 43%. So as we can see that since company is showing good profit growth, same is getting reflected in its stock price CAGR. There has been a re-rating of the stock as well. So the current PE price on which the company is trading is because of its good performance in recent years, and we can see that there has been a consistency when it comes to sales and profit growth. For last 4 years sales have grown consistently, profit too has grown. So compared to again the loss making companies operating in same sector, this company is looking favorable. Looking at company's technicals, company is following its increasing trend line, taking its support, and is currently trading near its trend line. But we can see that there has not been a good discount when it comes to company stock price, and PE ratio also when we checked it was pretty high. So we can see if we get some discount in this company in coming weeks, and if it comes down to level of around 350, then this stock also can be a good buy.